I heard a guy say it not that long ago, a guy named Dave Martin, well, we're in the people business, right?
Yeah.
You can go anywhere and have a bank, and you can go anywhere and get somebody to hold your investments, right? But if it comes down to, are you working with somebody that you know, that you can trust, that is looking out for you? And that's the same business that you're in, same business I'm in. It's people business and getting to know people, and that's why I travel all over the Metroplex, because I might get a referral, but I don't know you until I've sat down and broken bread with you.
Welcome to P&L, Priorities and Lifestyle, with your host, Rob Schultz. Rob is the founder and president of Schultz Wealth. All opinions expressed by Rob and his guests are solely their own opinions and do not reflect the opinion of Schultz Wealth Limited. This podcast is for informational purposes only and should not be relied upon for investment decisions. Please refer to our website for more information.
Welcome everybody to P&L, Priorities and Lifestyle. I am your host, Rob Schultz, and today I have banker extraordinaire, Mr. Bill Kresser. Bill, welcome.
Thank you.
It's good to have you today.
For sure. It's nice to be here.
We were just talking, it sounds like you kind of travel all around the Metroplex on days like today. Is that right?
For sure. I'll be in pretty much every part of the Metroplex this week. So whether it's Fort Worth, which is I call home, we'll be out in South Lake, I'll be downtown Dallas, Plano, Frisco, so all over.
Yeah, okay.
Kinda what I do.
We're good. And you're with Origin Bank?
Correct.
Tell us about Origin Bank.
So Origin Bank's been around since 1912, so over 100 years old.
Oh, wow.
Was originated in Louisiana, in Ruston, Louisiana, or Shudrint, really. And so they grew organically forever. And then in 2008, we came to Texas. And then you just saw the boom that we see in Texas every single day. And now we got up to be an $8 billion bank. And then we recently bought a bank. First time we bought a bank, we bought BTH Bank, which is mostly in East Texas.
Okay.
A little bit of presence here in the Metroplex. And with us buying them, that's pushing us up to the $10 billion mark. And I think that we'll cross that threshold next year.
Nice. Okay. Well, good. And how long have you been with Origin?
A little over 2 years now.
Okay.
Yeah.
Okay. And you are a private banker.
Correct.
Okay.
Correct.
So that's why I wanted to have you. That's why I wanted to have you on today, because I think a lot of us just don't understand that a banker's not a banker is not a banker. That different bankers, specialize in different areas.
For sure.
And as a private banker, you specialize in what exactly?
Working with high net worth individuals and also with business owners. I think people that have a lot of high touch, high need at times, and at times. It's a lot of it. What we do is simplify things for you. Most banks, if you need to do a wire, go in the branch, hope somebody's there. Hopefully they know what they're doing, and hopefully they can get somebody else to approve it down the line. With us, send over an email with all your instructions. Send me a text with all your instructions, something like that, or my assistant. One of us will call and verify you. We'll send it over to the wire room. They'll double check it to make sure everything's good to go, confirm it, and get it out. It's an easy step. It's an easy process that people don't realize how nice and convenient it is until they have it.
Okay, you just fell right into an example that just is painful for me. Right. Because we just had that happen with a client that we were trying to get a wire, forever, and she's wasn't able to, actually get a hold of anybody because it's a 1-800 number or whatever.
Sure.
She's trying to do the form and then finally, we did some research and we had to call her back and say, well, with your bank, the only way they're going to do this wire is if you go into the branch. And it's like, oh, well, that would have been good to know.
Right.
And of course, then you have to take time out of your day. But I would suspect that you're able to do it that way because it's a little bit, like you said, a little bit more of a high-touch situation.
Correct.
You know who your client is.
Yeah, when I call you on the phone, I know what your voice sounds like. And,
Yep.
and I know what your business is like. So if you're one of my clients and you're buying a bunch of crazy exotic cars, well, if you're calling me to buy an crazy car, I know that's what,
That's what you do. That's what this client
now,
does.
If another client calls me and they want to buy a $200,000 car, I'll ask them a couple questions and figure out, okay, it doesn't seem like you, but, so we know the clients that well that we know what the wires are, what to expect on a day-to-day basis. And it's rare that we ever get something that's out of the norm for the client. And if it is, then we just double check it and we make sure that it's exactly what they want done, and we're there to help them, make it easy for them, but they also enjoy that we're willing to double check and make sure it's the correct transaction.
Yeah, no, I think that's really important. It's interesting because, here, obviously same deal. We know all of our clients extremely well and know them by their voice on the phone. And that is the ultimate double check on, sending money out somewhere, is that verbal verify, which so far works really well until, I guess, AI figures out how to fake somebody's voice, and then we'll have to figure something else out.
For
right?
sure.
Yeah. Have you heard anything on any of that, by the way?
I heard a rumor that there was somebody that hacked into one of the big bank system with the AI voice thing, but I don't know that it's true. I just heard a rumor.
Yeah, I was kind of the same deal. I haven't had anything like come into my inbox saying that we're changing our procedures due to something like along those lines, but. We're just trying to
one day.
just gotta stay ahead of the bad guys for sure,
Absolutely.
man. Absolutely, it's crazy. So that's obviously a big part of what you do is just keeping your clients safe. But then also, what are some other things from a high touch standpoint that you feel like that business owners and high net worth folks really seem to appreciate when they're working with a private banker?
Yeah, I think one thing nice that we have is we've got a unsecured line of credit, and I think that. Nowadays, that seems like a very difficult product to get if you were to go into most banks. But it's not a product for everyone. It's a product for a business owner. It's a product for a high net worth individual. And what we'll do is we'll set up a line of credit for them so they can use it for whatever they want to do. When they want to infuse more cash into business, they want to do a side project and buy some cars or something like that.
Okay.
And depending upon your reason or your usage of the funds, majority of the time it's something business related, right? It's not for a personal expense or something like that. If we're doing a personal expense, they want to buy a car, well, let's go down to the dealership and go buy a car, But if it's for something that they're wanting to invest in or something to that extent, to use the money or borrow the money for a period of time, and it's for business purpose, then we put that in the description.
Okay.
And the nice thing about that, then the product doesn't hit their personal credit.
I got you.
So it doesn't show as an added debt on your.
So since it's not secured, or just okay.
Well, because it's being used for business purpose.
I got you. Okay.
Right?
So, and explain to everybody what unsecured means. That means that you don't have to attach it to an asset that they own, correct?
We don't attach it to a brokerage account. I wouldn't reach out to you and say, hey, can you lock up their brokerage account? We want to borrow against it. We're not doing that. Okay. I mean, it's nice, right?
Yeah.
But no, this is just easy product so that they can use the funds, not tie up their brokerage accounts, so they can move their funds around as needed. And then we don't tie up a CD or something like that. We do offer those products, and for some people that product is either needed or necessary. But with this unsecured one, we take a look at your portfolio as a whole. How many deposits do you have? What kind of brokerage do you have? And then what kind of income do you have? And kind of take a big picture of that, and can lend up to about half that liquid net worth.
Okay. So that's real handy, and we do recommend to clients that they maintain unsecured lines of credit when they're able to. And to do it during the good times.
Correct.
Not when you get in a bind and you really need it per se. Just simply because that's just an option, because sometimes you just need time with money.
Right.
Sometimes just there's a amount of time that needs to transpire. To, like you said, whether it's something personal or business wise. You extend yourself out a little bit on the short term. You know that this amount of money is coming in, next month or whatever it may be, and those lines of credit come in handy for that kind of thing.
For sure.
Now, we also recommend that people not max them out and keep them that way.
Absolutely
not. Or use them on a super regular basis.
Correct.
But just kind of use them as you need to.
Yeah.
And get that sucker paid off.
Absolutely. Absolutely.
I'm sure you feel the same way.
Yeah, we want to see it ebb and flow, especially if they're using it for a business purpose. It should come up, come back down, and have the ability to bounce, essentially. And as a bank, we lend money, but we want it back. So imagine that. I know. Yeah. So when we see somebody, or before even I set up the line for somebody, I make it very clear to them that this is not a loan that you're going to max out and have interest-only payments for the rest of your life. That's not how it works.
Yeah.
If you do that, you leave it maxed out, then we'll term it out.
Absolutely.
And that's, I make sure they understand that if we term it out, that payment's going way up, right? Because it's not principal interest rather than just being an interest-only payment.
Well, that's what needs to happen at that point.
Correct.
That's where it is. Yeah.
Correct.
Yeah, it makes sense.
Yeah.
Okay.
So, we don't really have that problem because we're educating the client up front, just like you do. We make sure that they understand, they know what they're getting themselves into, and they know what the product's for and how to use it correctly.
Yeah.
You know, if their air conditioning unit goes out and they need to pay $20,000 or whatever it is, $20,000 for that, or whatever other thing might be that's gone out, it's better for them to borrow that from me than to go in and sell some stock early or something like that and create a tax burden with this.
Sure.
You avoid that.
Or, just interest rates on revolving credit have gone through the roof at this point.
Sure.
It's just a whole different world right now than it was a year and a half, 2 years ago. It's crazy,
Absolutely.
isn't it?
Yeah, absolutely.
Yeah, so let's talk about that a little bit because obviously, you're providing these loans. That's a great service, but, you're also very big into deposits.
Of course.
That's a real important part of your job, right, is bringing in deposits.
Of course, yeah. We're not just a lender. We're a relationship bank.
Yeah.
I heard a guy say it not that long ago, a guy named Dave Martin, well, we're in the people business, right?
Yeah.
You can go anywhere and have a bank, and you can go anywhere and get somebody to hold your investments, right? But it comes down to, are you working with somebody that you know that you can trust that is looking out for you? And that's the same business that you're in, same business I'm in. It's people business and getting to know people, and that's why I travel all over the Metroplex, because I might get a referral, but I don't know you until I've sat down and broken bread with you.
Yeah. So on the deposit side, that's all changed too, right?
Correct.
So you have money market and some things like that, because I would suspect that your clients are a lot like ours. They, especially the last few years, COVID and all that, seem to be pretty cash heavy.
Right.
Yeah.
Yes.
Yeah. And now we got to have that money work for us a little bit.
Correct.
So kind of what are you seeing? What are some of the strategies to have ready cash per se, but still have it kind of working for you?
Yeah. With that, I think the big thing now is the money market prices have come up, or the rates have, right? Before in the past, it didn't matter where you were, big bank, small bank, or anywhere in between. You weren't getting, 1% was
Zero.
great, right?
Yeah.
Zero is most places, right?
But now it's a huge difference.
Yeah. You can see the banks that are fairly aggressive are going to be in that 4% range or somewhere in there, and I think that's a fair rate. If you're going too high, then why are you paying so high? Or if you're too low, are you that greedy that you're keeping all the money to yourself as a bank, right? So I use that kind of as a baseline, and then we kind of work from there with our clients right now, and that's going to change as things go up and down. Next year, who knows? Maybe 5's the baseline, or maybe it's 3 that's a baseline, or who knows? So
where do you think it's going? I mean, you got any? Of course, now this is that area where I have to say that neither one of us have any earthly idea. But just like anybody else, we can.
Yeah. This is my own thoughts or opinions on it. I think we kind of hold for a little while, and then magically, as elections come around, we'll see it's ease up a little bit on the rates. Would be my guess.
I think maybe you're right. We watch the yield curve really closely. It's been inverted.
Sure.
And that's why we're talking about money market rates, because those are short term and those are in essence higher than long term rates.
Right.
Which a normal yield curve that makes sense from a risk reward standpoint says that rates, further out, if you lock your money up for longer, you should get a little higher rate on it. Like if you buy a 3-year CD or something like that. And that's not the case.
No, it's not.
And so it's inverted, kind of moving to, straight line.
Right, true.
And then it'll eventually normalize.
100%.
And then the question is what Austin and I talk about all the time. So when it normalizes, which is it going to be? Are longer term rates going to go up? Or are shorter rates going to go down, or is it going to be a combination of that? And see, that's what I can't really figure out. I'm guessing that maybe the shorter term rates might come down a little bit.
I would say the shorter terms would come down a little bit for sure.
And then it'll even out, and then some of your CD products will become a little bit more advantageous, I would suspect.
Yeah. You can see in that environment, you can see maybe a 3% money market with a 4.5% CD that's out for extended period of time.
Yeah.
That would be kind of normal, I think.
I remember a long time ago, I used to use CDs as kind of a short-term deal. I would ladder out some CDs on the real short term.
We've done that plenty of times, in the past.
You could make a lot more than you could on money market.
Right.
And I wonder if we're heading that way where we'll see some more CDs. It's hard to say, I guess.
Yeah. I think that, those represent good times, right? You put so much away for a year, and then 3 or 6 months later, you put the same amount away.
Yeah, the ladder.
You keep going. And so you always have cash coming due, which is nice. And then when it comes due, you can determine at that time, do we go short with this money or along with it? Because we got more money coming due here in a little while. So, no, I agree with you. Those represent good times in banking.
Yeah, that's really fun when we're able to do that, where the rates make sense, where you have that normal yield curve, and you can work that kind of shorter end like that, and heaven forbid, even on like your bond portfolio with your wealth manager like us, maybe you actually make some money there too.
There you go.
That.
Exactly.
Yeah, we can just only hope, I guess, that things will get normal at
some point. They will, right?
But when has it ever really been normal?
It's never normal. It's always changing, just like everything else.
What are you seeing out there with your clients? Are they doing pretty good, or do you see that maybe there's some break points in the economy? I don't know.
Yeah, I with my clients, the wealth ones, this is when they're making money. They're, they're going out and they're purchasing things. Whether it's the one client I mentioned, going out and buying these cars. He's buying the Demons. I don't even know.
I don't know what that is.
I don't know, some Dodge fancy souped up car. But this last year they're making them. So I talked to him. Yeah.
Okay.
Demon. It's a Challenger or Charger or something. It's a super fast version of it, right?
I heard all the muscle cars are kind of going away at the end of this year. Okay.
And that's why he's wanting to get them.
Okay.
And at the time, we set up a line where he could go buy them, and then we'll term each one out. Right? Well, because he's planning on holding them. Well, he's buying them and then flipping them, which he didn't expect to do because people want them even more than he wanted them to hold. So we had to come back with a different product for him because that product wasn't the right product because he's sold them. Well, his line's used. Instead, we needed to have a revolving line for him to buy them and only give them, $1 million worth to buy cars or whatever, right? Yeah. Versus, hey, here's your $500,000, go buy 3 cars or whatever.
Yeah, that's rough, isn't it?
Yeah, it's a different world. But, and I've got other people buying up rental properties like crazy. Mm-hmm. Yeah, I mean, I know you see that going on. Yeah. And you see the bank. I've seen us I just had a little more conservative on it. We want to make sure that it cash flows, right?
Yeah.
We want to make sure that the rent that you're charging is now covering your taxes, your insurance, and your payment to us.
Which the taxes and insurance just keep going through the roof on those things.
So
I mean,
crazy,
we look, if you take the interest rates going up, taxes going up, insurance going up probably more than the other two, I would say almost. It's getting harder to cash flow those things.
For sure.
What about the short-term rentals? Have you seen that? I've heard that kind of come down a little bit.
Yeah, it's come down some because and I don't know, not just our bank. I've got some clients that have a couple of those, but we're leery to have too many of those, I think, because the rules change all the time.
Yeah.
You've seen cities or neighborhoods say, no, you can't have them anymore. I mean, my neighborhood's a historic neighborhood, and every day somebody's on there. One person's talking about how good it is, next person's talking about how bad it is. And, I think with the constant changing in that, it makes it hard for a bank to go, hey, go out there and buy as many as you want short term. We'll do a couple of those, but we prefer you to have long term leases on them.
Yeah, and that's part of the risk that sometimes we forget about is that the rules can change, regulatory risk.
Sure.
Rules can change, and all of a sudden you can't make money the way you thought to previously.
Yeah, for sure.
That's the risk that bankers have to think about all the time.
Oh, yeah, absolutely.
What's going to happen if this happens here?
Yeah. I spent a lot of time with our risk officer there in the office, especially on a bigger deal where we have to make sure it makes sense for the client, make sure that it makes sense for the bank, right?
Yeah.
And if it doesn't make sense for the bank, why not? And so we can educate the client on why it doesn't make sense to us. And sometimes they can justify that by something that we didn't see. And then other times they're like, oh yeah, we didn't think about that. Maybe we need to pass on this deal. So it's just about having the communication and educating them.
Okay. All right, cool. All right, so what else as far as, that kind of high touch private banker stuff that, you feel like is kind of your special sauce that you see the clients that work with you really appreciate? I mean, I get it that they've got your cell phone number and all that.
Sure.
Right?
Yeah, they call me. I've got one phone, and that's it. Everybody calls me, whether you're my kids with an emergency or your client, call me up because they got a deal or whatever, right?
Isn't that crazy? Because that's the way we work too now. I mean, it's just pretty much, it's my cell phone and, that's it.
Right.
Is that a post-COVID thing, or were you even doing that pre-COVID?
I was always doing that.
Were you always doing it? Okay.
I couldn't imagine carrying around two phones. One's bad enough.
Yeah. But what about like an office phone number line, though?
It rings right.
It just goes straight there.
It's a separate number. It rings right here. Yeah. If I'm sitting in my office, I'll answer it off the handset or whatever. But for the most time, it's just we
don't even have any handset phones around here.
Yeah.
I just did away with them. I was like, why?
Correct. Yeah. Soon though, you were not even know what the phone jack is anymore. Little.
No, we didn't. We didn't. We built out this space up here in Las Colinas in November, I guess, and we didn't even put phone jacks in.
Wow, that's cool. That's cool.
Isn't that crazy?
It's crazy to think of. Like 5 years ago, there's no way in heck you would have thought of doing that.
I know. We would have spent like $20,000 on some kind of phone switching thing in the corner, and none of that.
Yeah, that's cool.
I know.
But I think the thing that we do is it's meeting our clients, getting to know them, and treating them the way they want to be treated, which sounds kind of silly, but we all want to be treated a little bit differently than the other person, right? The way your wife wants to be treated by a banker versus the way you want to be treated as a client by a banker or by whoever you're dealing with, a car dealership or whatever. We have to be able to customize that and provide the service to our clients that they want, they need, they expect, and they should have high expectations for their banker. If you don't have high expectations for them, you need to get out that bank and you need to figure out what it's like to have a real banker that's going to take care of you.
Yeah, but banking relationships are so sticky because it's hard to change banks, isn't it?
Oh, without a doubt, it is very hard to change banks.
Painful.
It is painful. Yes. We've talked about this prior, and
so,
it is.
Yeah.
It's tough.
So when people do change, is it usually you think because they just kind of got to a point, or what?
Yeah. So my biggest referral source, he sends me people, and they've just been fed up because they haven't got the service that they wanted, and usually they're with one of just a couple banks.
Yeah.
and they finally get rid of it. And then when they come over and they're there for a month or two and they're like, holy cow, why didn't I do this earlier? Why didn't I do this a long time ago? But you're right. It is tough. I've got a couple clients that have been with me, but one in particular, it's been with me for 15 years. Well, when he came on board, I was with Wachovia. That became Wells Fargo whenever the crash happened. And then when I switched to Wells Fargo over to BBVA, which is where I was before, switched with me then. And then when I decided that the change came because of the changes that were happening with that company because they're getting acquired, first to follow, And another one of my clients, the same thing. He's followed me several times. And his dad is a billionaire. And his dad said, once you find a good banker, you stick with them. He said, they're not going to go somewhere they can't take you.
Yeah.
So know that, kind of deal. And that's always kind of stuck with me. And I've always kind of relayed that to my clients. Like, I'm not going somewhere where I can't take you. Trust me, if I was ever to leave, then I'd have these conversations. That's what I had to have those conversations when I came to Origin with my clients saying, hey, and I mean, they've all been extremely happy. It's a pleasant change.
There are a lot of bankers that do move around. So you've been a few different places, and that's kind of
it's normal.
It's kind of part of the deal.
It is.
So why is that?
So the last bank I was there for 9.5 years, myself and another guy, Greg Irwin, that we worked together.
Does the situation just change?
It did. Like we got bought by a big bank, and we didn't want to work for the big bank. The big bank didn't really have the values that we had, and fair enough, it was time for us to move. So we came over to Origin, and it's been fantastic over there. Great people, great culture. We're the number 2 bank in the whole United States, rated by American Banker Association to work for.
Yeah.
So when we're happy, it makes it a lot easier for us to do the right things for our clients and stuff. So
yeah, I can see that. It's just frustrating though that that these banks can't figure out how to maintain some continuity.
Yeah. Yeah.
But I guess they're always kind of morphing and changing and
they're always morphing and changing. You've always got more government changes that come in that affect the way things are being done. So, sometimes you're happy with them, sometimes you're frustrated with them or whatever, and those can change the bank as a dynamic as well.
Yeah. Okay. All right, so since we were talking about deposits and things like that, let's talk about FDIC a little bit.
Okay, yeah.
Huge topic recently
For sure.
because of the regional bank kind of issues that occurred. Silicon Valley Bank, and followed by Republic, I guess it was, or
First Republic.
First Republic, and then obviously we fielded some calls.
Sure.
I'm sure multiply it by 10, and that's how many calls you field had to talk about.
I didn't have to field too many calls. I can only remember one call I had to fill.
Oh wow!
Filled, of a guy concerned, right?
We talked quite a bit about it with certain people. I don't know why. Actually, I have one person that I know. It's not a client, but he's a pretty good friend. Had a bunch of money at Silicon Valley.
Oh, yeah.
So we had some long discussions.
Sure, yeah. But Silicon Valley was known for having lots of clients with lots of money there.
Yeah, and very focused as far as who they were. Obviously, they were, in the tech field, in Silicon Valley, so just really uber focused, which I thought was interesting. Because I guess when you look at that, you say, okay, well, one of the things you can do as a bank to protect yourself is to be a little bit more diversified as far as your client base.
Sure, of course.
And they did just the opposite. Right. They did some other really stupid things too.
Yes, we know. Yeah.
But that was interesting to me.
Yeah.
So, and you were just saying a while ago how y'all are going to look at some loans and make sure you don't have too much exposure in different areas and stuff. I think it's important for people to understand how important that is for a bank to be looking at, at it from a risk standpoint for themselves, and that's simply just to protect the consumer.
Yeah. So to speak to the FDIC thing, there's a website out there, government website called edie.org, I think, or .gov. I'm not sure what the back handle of it is.
It's got to be .gov, right?
Right, yeah. So it pairs with the FDIC, and what you can go in there and you can do the titling of your accounts, and it'll help you figure out how to make sure you're covered, right?
Oh, that's cool.
Because
so say that again. What was it?
EDIE.
EDIE.
Yes. .gov, I believe.
Probably.
Yeah.
Okay.
So the nice thing about that is, look it up while I'm talking, but the nice thing about that is you go in there, if it's you and you say it's you and your wife, you have an account titled with you and your wife together, there's $500,000 worth of coverage. Now you account with your name and your wife as a beneficiary, there's another $500,000 in coverage. Now you got one with your wife, with you as the beneficiary. There's another $500,000. So now we're at $1.5 million, and it's just two people.
So I can see it. So I just looked it up, and so it is. It's edie.fdic.gov.
Okay,
that's what it is. So it's the FDIC website, which makes sense. It has a calculator and all.
Yeah,
that's a good tip. Thanks, Bill.
Another thing that our bank does, we've got, as you can imagine, I've got some clients out there that, even no matter how we slice and dice it with the amount of people that they have in the family that they would want on the accounts and the titling, we also have a thing called ICS. So ICS, what it does, it's a network of banks that are part of it, and so we have part of your money out at other different banks, right? And that money is there overnight, still your money kind of deal, and it allows you to have the FDIC coverage on every single penny you have with
you
us.
basically lease FDIC coverage from other banks.
You're exactly right.
Okay.
Yeah.
So that costs you something on your rate, maybe 20 basis points or something like that.
Correct.
Okay. Yeah, that makes a lot of sense.
If that's your biggest concern, then let's do this.
Fix it,
if it's not, then
don't worry about it.
Don't worry about it.
Which is an option.
Yeah.
Because it just seems to me that the government's going to back pretty much any of the consumer deposits.
Has so far,
because that's what they've done. So and there's been other instances of that. I remember back in 2008, we got really concerned, right, about liquidity and basically the entire system failing.
Sure.
And part of that is money market, which has never really truly been guaranteed or backed by anything.
Right.
It's just we call it breaking the buck, right? You remember all that?
Oh yeah.
So we still kind of money market is really considered very, very safe, but it's not necessarily guaranteed.
Right.
However, the government's never really let any of those go away.
Correct.
So I don't know.
Yeah.
It's an interesting situation.
It is.
For sure. Everybody has to kind of come up with their own answer as far as what they're comfortable about.
I agree with you 100% on that. You got to be able to sleep at night, and you and I, it's just our job to help them when it comes to their financial questions, to be able to give them that peace of mind and make sure that whatever their risk is, that we're eluding it or diverting it. So that
I agree. I think you're exactly right. And I was reminded by that this morning, that a lot of times I don't fully, maybe understand, somebody's concern, because like for me, I just live, eat and breathe in the stock market, right? So when it goes up and down, it really isn't, I don't really think, it's just what it does, right?
Sure,
but
of course.
For other people, that's not necessarily the case, but you got to meet people where they're at.
Yeah, you do.
And allay their concerns as best you can, and obviously help them make decisions that, like you said, help them sleep at night. Mm-hmm. Get FDIC coverage on everything. Make sure you're all buttoned up, and if that makes you sleep, then do it.
Right?
Yeah, that's cool that we have all those tools, like you said, to be able to handle all that.
Sure.
Because I've run into people that sit there and they'll have, they're running around to every bank in town, picking up a $250,000 CD or whatever, or $100,000 CD or what, and having to manage all that stuff. And
they're diversified, right?
No.
Diversified in banking is not, in different banks is not diversification.
No,
some people think it is, but it's not diversification whatsoever.
No, it's not. And
diversification,
that just sounds like a lot of trouble.
Together.
Yeah, it's just you're just creating a lot of trouble for yourself. You don't have to do all that.
Of course not.
Yeah. Well, good. So you said that you live in Fairmount.
Correct.
So tell me about that, because that's kind of a new ground, so to speak. It's a historical area down there in Fort Worth. Right?
Correct. Yeah.
And tell me about that. You like it down there?
Yeah. So it's awesome. It's down by the hospital district, just south of 30. I love it because you've got Magnolia Street, which has the bars and the restaurants and things like that.
You can walk over there almost?
Yeah, you can walk there.
Wow.
I mean, I moved to the back part of the neighborhood. I used to live half a block off Magnolia. And now I bought a house down the southern part of it, but still less than a mile to walk up those places, have lunch and dinner or whatever,
Nice.
right? And my kids love it because they've got their favorite restaurants along there that we go to, and great neighbors and stuff like that.
So you've met a lot of people down in there?
Oh, yeah. So, and it's all ages. My next door neighbors, they're retired couples, and then there's young couples with young kids, and people like myself, they're somewhere in the middle of it all.
So how far has it gone? And I haven't driven through there in a while. How far has it gone as far as all the houses kind of coming up to and being renovated? I mean, it's still kind of spotty in there? Or?
There's still a couple of spots where I would say I'm on Fairmount, which is the nicest street in Fairmount.
Yeah.
Ironically, the only one that's super wide. All the other ones are pretty narrow.
Okay.
And in our block, we've got one that kind of needs some improvement. And then the next block down, there's another one that needs some improvement. But for the most part, that street's going to be your best street. The other ones you might go, and there might be two on a block that still needs quite a bit of work, right?
Okay.
But for the most part, everybody's, it's flipped over a generation, or it's flipped over a couple owners. and everybody now in there takes care of their stuff and is proud to be in there, I'd say.
That's cool. That's great.
Yeah.
And people with kids and the whole deal, I guess. Right?
Yeah,
okay.
absolutely. Yeah. There's a Montessori school right there by us too that some of them send their kids to, and then there's the regular public schools as well. So.
And have you had clients or people that you know of that have been doing investments within that area with the historical homes? Or are they mainly is it mainly a labor of love kind of situation?
Yeah, it's more of labor of love. You'll see there's a couple companies that come through there and they purchase a house that was distressed, and then they fix it up. One in particular does a really great job, and they flip it. They'll add on to it maybe, or add a bedroom or two, or add a bathroom and a bedroom or something like that. But they do some fantastic work in the neighborhood, and they definitely make some money.
What'd you do with your house? Did you do it yourself?
So my house was pretty close to being done. It was a duplex. It got flipped to a duplex back in the 50s. Which was pretty common in that area. You'd rent out half of it and it would be able to pay for the whole thing, and so people did that a lot and throughout the neighborhood. But a guy bought the house. A lady that had it for years in the family. She started to convert it back to a single family home.
Okay.
She started the work by knocking down the walls and that kind of stuff to get that part going, and then a contractor ripped her off.
Oh, okay.
So another guy came in, and then he bought the property, and he did the majority of the work. I've got a modern kitchen in there, but I also have stained glass windows in the living area. So it's a kind of hybrid of two. Outside looks relatively old, and the inside, the old but kept up, and the inside is very modern. Per se, which is probably not normal for all the houses there. A lot of them still have that kind of.
It came out well then, so it sounds like there were a couple owners in there that didn't come out so well, and then you
and then I came in and I've dumped in probably $25,000 this year into the house, and then some last year, and I added a big old added section to the house to make a walk-in closet and stuff, and a couple other things that needed to be done around the house to get it up to.
Do you do a lot of the work yourself?
No, okay. No, I don't do any of the work myself. Okay. We've got a contractor friend of the family that does a lot of work for my dad, and my dad's out in Eagle Mountain, so my dad has a bunch of friends out there and kind of keeps them busy, and and then every once in a while I get them to come help me with something.
There you go. So, what do you think about, like, let's say just even residential real estate, like somebody wanting to sell their house right now and buy it? Of course, it seems like it's so difficult at these rates, right? Because it looks like everybody's kind of holding pat.
Yeah.
Because you probably have like a 3% rate on your house.
Correct.
And then, oh, cool, so now I'm going to go buy a new house and it's going to be 7%.
Right.
Or thereabouts.
For sure.
Because we already talked about what you said, that you really have to be able to cash flow these investment real estate pieces. Are you seeing that maybe this slowdown will continue because of that? Because these rates seem to be so sticky, or what do you think's going on?
Yeah, it's the rates. The rates cause us not to move, right?
Yeah.
The ones that, like myself and you, they would have the 3%. Like, why would we? What are we going to change here? Like, add some more square feet. But if we did, it costs twice as much as it should cost, because now you're refinance the whole house or sell the whole house or whatever. So that's why I think that we're seeing less inventory out there. Because people aren't just moving to move, which is what people did for a while, right?
Did for a while.
Nobody stayed in their house for more than 4 or 5 years, and we just move. And whether we want to go, closer to the city, further away from the city, we want more land, less land. You're not seeing that movement now, which brings down the amount of houses that are out there. I think the houses that are out there are still selling pretty well and pretty quick. Everything I've seen. I had a client that sold a house in Arlington, pretty close to Lake Arlington, and the first weekend they had 3 offers for more than what he was for. So
you can
sell
it, but then what do you do?
Yeah, what do you do? I mean, he was building a big old house out in Quail Hollow. That his parents are moving in with him out there. And they were about to have the realtor's about to put that house on the market for $1 million. So I'm excited and interested to see how quick that stays on the market.
Yeah.
So that one's just south of 20 in Arlington as well. So
yeah, not far from me. Yeah.
Yeah. So I'm interested to see how quick $1 million house sells. A $400,000 house sells pretty quick, but
I don't know. I think,
and I think a lot of people that are coming in to buy them are people coming from out of state.
Yeah.
They cashed in where they were at, so they're buying them with cash or putting a heck of a lot down, so that payment's not that big for them, right? So you're seeing those are the people
from a relative standpoint, coming from California or something like that, or New York. So what about like those that are staying, like you said, not necessarily moving now, but are a lot of your clients doing, home improvement loans and things like that?
Oh yeah, home equity loans are going crazy. We've got a lady in the office that does them, and I mean, she is doing 10, 12, 15 a month. I mean, just killing it.
Really?
All these people are doing their renovations now because, well, they want a pool or they always wanted this extra space or extra room or whatever. So they take out the home equity loan and they do that instead of.
Is that generally done as a home equity line of credit these days?
Yes.
Okay.
Yes. Yeah.
Can you explain to us how that works?
Okay. Yeah. So Texas has different rules in most states, which is
typical.
Texas. Yeah. And the reason that they're in place, or the traditional reason why they're in place, is Texas is very protective of your home. At your primary residence, right? And that's why we're conservative with the rules that we have. So in Texas, you can borrow up to 80% of the home. So easy math, I own a $100,000 house, I can get $80,000 worth of debt, right?
Yeah, total,
right? So now the way that works, though, is if I owe $50,000 on this $100,000 house, I can only get a line of credit now for $30,000.
Yep.
Right. And then Texas also has this other funky, weird rule that when you draw from the line of credit, you have to take $4,000 at a time minimum.
No way, I didn't know that.
Yeah, so crazy rule. Now,
has that always been around?
Always around, yeah, since the very beginning, and I think right around 1992 or 3 or whatever we originally let them go. So the crazy rule is, now there's nothing that doesn't say, I only need $100,000. Yeah, I only need, let's say $1,000. Well, I can turn around and pay that $3,000 back. But the only way it would catch you is if you only had $3,000 available online because you used all the other out.
Yeah.
You have to wait till it gets back up to $4,000 to be able to draw from it.
Okay, well that's an interesting twist there.
Yeah.
Okay.
And then you only take one out a calendar year. So if you take it out today, you would have to wait a complete year to either refinance it or whatever, right?
Okay, back up on that. So I have this line of credit, call it $30,000, whatever it may be. And then I pull down on it greater than $4,000 to do whatever.
Right.
And then what are you saying? Then what?
Yeah. So let's say in your example, right? In this example, we've got the 30 drawn on the house. Well, now the house is worth a year later, or let's say 11 months later, it's worth $150,000. Like the mortgage has gone up.
Okay.
Well, you're like, well, I want to capitalize on that and get a new appraisal and increase my line of credit. Same rules apply, but you have to wait a year. So if it's 11 months, you're like, oh, well, I got to wait another month. So once that 12-month mark hits, then we can refinance it again and get you more equity. So instead of having, what would that be, 53? So you can get another 15,000.
15,000, yeah. Okay, so you can do that as the value changes on the house, and then the payments that you make on it, since it's a line of credit, is it pretty much interest only, or is it
interest
amortized?
only? Yeah, you're correct on that.
But you can amortize it if you want, probably.
Yeah. There's ability to do that.
Okay.
Too. Yeah.
Okay. So you've got a lot of capability there
for sure
to do some things. Yeah. So a ton of people are doing that right now, I guess.
Sure.
And the rates are okay.
Pretty close to prime.
Yeah.
So,
okay.
They're not great, but they're. I mean, if you're just.
It's a short-term deal.
It's a short-term deal. You're adding to the house. You're putting a pool in. You're whatever.
Get that thing paid off and move on down the road, but just use it to be able to get it done now.
Yeah.
Okay.
Yeah, and the nice thing you'll see, our bank's not unique in this by any means, but if you go $250,000 or less, each bank's got its own rules, but that's probably kind of a pretty good guideline. The bank will pay all your closing costs.
Okay.
So if you go above that with us, then that's when the closing costs and fees start coming in. But if you're under $250,000, we won't charge you to do it.
So like the appraisal that's done and all that, it doesn't have to be like a full appraisal. I wouldn't suppose.
No, we usually do a desktop on something like that. Yeah.
Okay. Yeah, that's cool. Okay. Something else I was thinking about. So, kids.
Yes.
So I don't know if you found this to be true, but I have that my clients, their kids are really important to them.
Sure.
And they get to a point and they've kind of learned some things the hard way. I've learned some financial things the hard way.
Right, of course, yes.
Sure you have as well, Bill.
Definitely.
Our clients have. And they're like, man, I just really want my kids to figure out this finance thing and I want to help them.
Right.
So they'll set up accounts and things like that. We've done that with our kids and so forth.
Yeah, mine both have accounts too.
Yeah.
So,
yeah. What do you suggest as far as some of that? I mean, I'm sure you do that with a lot of your clients as well, like get them where their kids get going.
Yeah, it's just sitting down and educating them. Every picture is different as we've talked about with each one. But a lot of it is just setting up, maybe first we get a savings account and get that kind of set up for them so they start saving money. And then when they come 15 or whatever, then we get the debit card and stuff. They're ready to use that and stuff like that. So that's kind of where my oldest son is he's got a checking account, he's got a debit card, and my younger one he's just saver now. It was the other way around, which is nice because he's got a decent amount of money saved up. So when he goes to have fun with his friends and stuff like that. But then it's a matter of then going through the account, make sure they have online access, they have it on their phone so they can see it and everything like that. Because you want them to be able to track and see what they're spending their money on.
Yeah.
And then, either his mom or I will review the account with them and go through and go, okay, so this week you ate at Subway or whatever 3 times. And then next week you only ate once. Next week you only went once, and see how much money you spent. So you spent $50 this month. It was on food.
Yeah.
It's so. Think about that. You can get it to school for free or take food from home for free. Was it worth the $50 you spent? And he might say, yeah, it's great because I went with my buddies. We had a good time. We walked across and got off campus to have lunch, and that's just cool.
Okay.
Great. But if we ever saw that it was now he's spending $100, $200 on food, that's when you help him and tone it back. Like, let's go once a week out to eat, and the rest of the time let's eat food that we provide you at the house or food that the school provides you.
I love that, Bill. So that's allowing our kids to kind of decide on their own, what it is. So they have free choice.
Yeah.
With some guardrails, with some guidance.
Exactly.
That's a perfect way to do it.
Yeah.
Yeah. And then, like you said, learning how to use the technology and all that. And that 15 to 16 year age, I totally agree with that too. So many people wait until, they're going off to college before they help them do all this stuff.
Yeah.
Well, now you're not having those discussions.
No,
they're not
listening.
No, they're not here. They're off at college and trying to figure it out on their own. They feel like they're really trying hard to be an adult.
Yeah.
And, don't necessarily listen quite as much. So it's really, I think that's great to start them that early. And you'll help your clients with stuff like that too.
I think 15 is like maybe you want to go 14 or whatever, but 15 is a great age 15. Right before 16 because they're not driving, they're not going anywhere, right, for the most part, unless they've got older friends or whatever. So they don't have a whole lot to spend, right? But you want to do it before they hit 16 because now they need to have money in their account because if they're driving their car, they need to have gas or whatever it is, and however each household does it, their thing's different when it comes to whatever they're giving their kids and stuff. But you want to teach them before they're even driving because when they're driving, they got to know, hey, I got to make sure I have X amount in there in case of an emergency, right? Yeah. And they know they can never go into that field, And I've been blessed. My oldest, he does a great job with it, and never have really any complaints and stuff like that. But then they start at 16, they start having a job or whatever, right? He talked about being a lifeguard next summer and stuff like that. So just figuring it out. But then now they learn about the direct deposit, and then they
learn about taxes.
About
FICA.
Yes, they learn about all that fun stuff too, right?
What? I thought I was making $10 an hour.
Right.
Well,
not really.
not really.
For sure. And so I think that, right before that, then now, and you're exactly correct. If you wait till they're 17 or 18, they're probably busy with who knows what, a job, maybe a girlfriend or whatever, plus sports, plus driving, plus sports, the freedom, all that stuff. And it's too late there to, at 15, I think at 15, when the Kresser was 16, well, now I got something to, I don't know if you want to say punishment, I'd be all right, but now I get something to hold you with. If you decide you want to screw up, now I can take the car from you, right?
Yeah,
I can take keys from you, right? Yeah. So if you can teach them that, when they get 16, they're going to have to worry about it. They already know how to handle that. They already know how to put themselves in the right situation.
Yeah.
But it also gives you that is, if you need it, it's there.
Yeah, you need the hammer, just go. Yeah, that's good. Well, excellent. Well, this has been a good discussion. I love talking about this kind of stuff. Just the basic financial habits from a banking standpoint are so crucial. We're always learning, but certainly that last part I love because being able to get our kids to where they're able to kind of grow up in a good basic financial structure within a good banker and with good habits is so awesome.
Sure. Yeah. And the other thing we do is we work with the people that are post college that are either going into business with their dad or going into business with their mom or whatever. We work on that too with the planning there as well, and I know that we can partner with somebody you and come up with a full succession plan and everything like that. So something to think about there too as well is like what's the plan here after college if you're going into business with family that can be
all that stuff. Yeah, no, you're right. That's right. Well, good. Well, Bill. We'll wrap it up. Before we do that, can you tell us a good way to get in touch with you? If there's somebody that wants to talk to you about banking stuff,
sure.
What's the best way for them to get in touch with you?
Best way is call my cell phone number. Cell phone's 817-319-1861, or text me. If you do call, leave a message because a lot of times I'm tied up in the middle of a meeting or something like that, but I'll always get back to you. So call, text probably is even easier. But that way I see it when I get done and I jump on it and get a hold of you.
Great, Bill. So we'll have that in the show notes as well. And anybody out there, if you want to get in touch with Bill and talk about banking stuff, I encourage you to do so. Really appreciate you being on today.
Yeah, thank you. It was nice.
For everybody out there watching, remember we try to put this out every other week. It's got a focus on business owners, but as you can see, business owners are people too, so we talk about all sorts of things. But we really appreciate you hanging in there with us today, and everybody have a great week. Take care.